All right, let's unpack this. Today we're going to be diving deep into Zomato's world.
That's delicious.
Their Q3 FY25 performance, to be exact.
Getting specific.
You know, you sent over quite the stack of documents here.
Oh, yeah.
Shareholder letter, financials, auditor's report,
You really went all out.
even some questions
Sounds like someone's pretty hungry for knowledge.
about this food delivery giant.
Looks like we've got a real Zomato enthusiast on our hands.
This is going to be fun.
Definitely.
Our mission is to cut through all that financial jargon, uncover what these results really mean.
Right.
For you guys out there listening, whether you're an investor
Hmm?
or just incredibly curious about this whole food tech scene that's playing out.
Sounds like a plan. Where should we begin?
Well, let's set the scene first.
Okay.
Zomato's consolidated adjusted revenue. This actually shot up 58% year over year,
Wow.
landing at a cool INR 5,746 crore.
Okay.
And their gross order value,
GOV.
that's basically the total value of all the orders on their platform,
Right.
showing some similar growth.
Across the board.
Yeah, across the board.
So overall, a strong growth story.
But Zomato isn't just food delivery these days.
Right. They've got their fingers in a few pies.
They do. We've got food delivery, of course.
The classic.
Then there's the quick commerce game with Blinkit,
Blinkit.
and even that going out segment,
Going out. Okay.
covering dining and entertainment.
I like how they're branching out.
Let's break down each piece of the puzzle here.
Sure.
See how it all performed.
Yep.
Starting with that mainstay, food delivery GOV, that saw a respectable 17% year-over-year growth.
Respectable. Oh,
Not earth-shattering.
not earth-shattering, but,
Yeah.
solid progress.
Yeah, solid progress.
Right.
Then you got that quick commerce star, Blinkit,
Mm-hmm.
clocking in a whopping 120% year-over-year GOV growth.
Whopping okay.
Talk about a sprint.
Yeah, they're really hustling.
And it doesn't even end there. Their going out segment,
Okay.
think dining out, entertainment,
Mm-hmm.
that saw a mind-boggling 191% growth.
Mind-boggling. People are really eager to get out and about again.
Yeah, I guess so. Now, for those of us less familiar with the ins and outs of financial statements,
Right.
can you remind us what GOV actually tells us? Is it all about the revenue, or is there more to it?
So GOV is a great starting point, definitely,
Mhm.
because it gives you a sense of the overall scale and momentum of the platform.
Okay.
It's like checking the pulse.
Okay.
Is the heart beating faster, slower, or staying steady?
I like that.
But, to really get a good understanding of the health of the business,
Mhm.
we have to look beyond just the GOV.
Beyond the GOV.
The profitability.
So,
Are they making money from all of this activity?
right, because high growth doesn't always translate to profits,
Exactly.
especially in this world of food tech.
Exactly. And that's where things get really interesting with Zomato.
Okay.
Their consolidated adjusted EBITDA, and that's a measure of operating profitability,
Mhm.
surged by 128% year over year,
Wow.
reaching INR 285 crore. A lot of that comes from improvement in their core food delivery business,
Okay.
where their adjusted EBITDA margin climbed to 4.3% of GOV.
4.3%.
Yeah, up from 3% a year ago.
Okay.
So they're getting more efficient, turning all those orders into profit.
That's a significant jump. But I remember from the shareholder letter, they were aiming for Blinkit,
Yeah,
their quick commerce arm, to be nearly breaking even this quarter.
almost there.
Did they actually hit that target?
Not quite.
Oh, well.
So instead of inching toward profitability,
Mhm.
Blinkit actually reported a loss of INR 103 crore.
Oh, wow. That's quite a gap.
A bit of a gap there.
What happened there? Did their grocery delivery dreams hit a snag?
Well, they basically decided to double down
Double.
on Blinkit's expansion,
Okay.
specifically growing that quick commerce store network.
Okay.
And they're aiming to hit 2,000 stores
2,000.
by December 2025,
Wow.
which is a whole year ahead of schedule.
Ambitious, to say the least.
Ambitious is a good word for it.
So they're saying profits can wait. We need to dominate the market first.
That's one way to put it.
It's a bold gamble.
It is.
Do you think it's a wise move?
Well, it's certainly a high-stakes play, I'll say that. Prioritizing grabbing that market share in the quick commerce space,
Mm-hmm.
even if it means sacrificing short-term profits.
Right.
This tells us that they have a lot of confidence in Blinkit's potential.
It really makes you wonder what makes them so sure Blinkit will be a winner in the long run.
It does make you wonder.
Are they seeing something we're missing?
Maybe.
Some signs of a gold mine?
Well, their shareholder letter offers some clues.
Okay.
They're highlighting a really strong margin profile.
Margin profile.
In the more mature parts of the Blinkit business, meaning those stores that have been operating for a while.
Okay.
So this suggests that as they scale up and as more stores mature, profitability should improve
Oh, I see.
significantly.
So it's not just about adding more stores.
No, it's not just about adding more stores.
Right. It's about those stores becoming profitable.
Right, over time.
Okay.
It's a long game.
Yeah.
And they're betting that they can turn those early losses into, substantial gains down the road.
But this is a crowded space. We all know how heated that competition is in quick commerce.
Yeah, it's a tight race.
So how is Zomato planning to stand out? Keep those customers coming back to Blinkit?
Well, that's the million-dollar question.
It is.
While others are battling it out with all those discounts.
Yeah, free delivery?
Free delivery.
Yeah.
Zomato claims their core Blinkit customers are surprisingly loyal.
Loyal, huh?
Yeah.
So they're willing to pay delivery fees even when competitors are practically begging them to switch.
Begging them to switch, yeah.
With all those freebies.
With all the free stuff.
That's wild. What's driving that kind of loyalty? Can't just be the name Blinkit.
You would think, right.
What is it?
Well, Zomato says it's all about focusing on quality service.
Okay.
Emphasizing a wider selection of products. High availability.
Okay.
Consistent service levels.
So they're taking the high road.
Kind of, yeah.
Aiming to win hearts and minds with quality, not just cheap prices.
It's a good approach.
Will it be enough to carve out that dominant position in this cutthroat market? Only time will tell.
Only time will tell.
For now, let's shift gears a little bit.
Okay.
Look at their core food delivery business. We know it grew.
Yeah.
But the shareholder letter also mentioned a slight slowdown.
A slight slowdown.
Compared to expectation.
Compared to what they were hoping for, yeah.
What's the story there?
They're saying they attribute that to a broader dip in demand.
Dip in demand.
That started back in late November 2024.
So it seems like those economic headwinds are starting to bite.
Even in the food delivery world.
Even in the world of food delivery, yeah.
They're not immune.
So even Zomato's not immune to the ups and downs of the economy.
It's tough out there.
But they're not throwing in the towel just yet.
Not at all. No, they're acknowledging those challenges. But they still project that long-term growth.
Okay.
Over 20% per year for food delivery.
That's still pretty optimistic.
Yeah, they're pretty optimistic.
So what makes them so confident that food delivery will bounce back is this wishful thinking?
I mean, they're pointing to a few positive signs.
Okay.
One being that increase in profitability in their food delivery business.
Okay, the increase we talked about.
Yeah, that suggests they're getting better at squeezing profits
Out of each order.
out of each order, even as that growth slows down.
It's all about finding that delicate balance, right?
Yeah, that delicate balance.
Making each delivery count.
Each one counts.
Remind me, what actually drove that profitability boost in the first place? Was it cost cutting or is there more to it?
So they've actually used a combination of tactics.
Okay.
They've increased platform fees for customers.
Oh, okay.
Might not make everyone happy,
No, probably not.
but it does boost that revenue.
Yeah, of course.
And they've also implemented some cost optimizations across their operations.
So they're doing more with less.
More with less, exactly, which is crucial in this kind of economy.
Tightening their belts
Yeah,
while still delivering the goods.
got to deliver the goods.
And they're expecting this positive trend to continue.
They are.
They are.
They're projecting that their food delivery adjusted EBITDA margin will stabilize around 5%.
5%.
Over the next few quarters.
That's a pretty healthy margin.
It's a healthy margin.
Especially for a business still aiming for such ambitious growth.
Yeah, they're not slowing down.
So it seems like they might be finding that sweet spot between expanding their reach,
Right.
ensuring each delivery actually contributes to their bottom line.
Yeah, they're finding their rhythm.
They are.
And it couldn't come at a better time, given how competitive it is out there.
Yeah.
So this focus on balancing growth with profitability might be their secret weapon in this whole food tech battle royal.
Speaking of battles, remember when 10-minute food delivery was all the rage?
Oh, yeah, I remember that.
Zomato jumped on that bandwagon.
They did.
With Zomato Instant.
Yeah.
But it didn't quite pan out, did it?
It was a valiant effort.
Yeah.
But they ultimately shut down Zomato Instant.
Yeah, they did.
Because they just couldn't make the economics work.
Right.
Delivering food that fast consistently while making a profit just proved to be too much of a logistical puzzle.
Yeah, too many moving pieces.
Yeah, exactly.
So they waved the white flag on super fast delivery.
For now.
But I noticed something interesting in the CEO's letter.
Oh, yeah.
They're not giving up entirely, are they?
Not entirely, no.
They seem to be itching for a rematch.
Little bit of unfinished business there.
Yeah.
Dipinder Goyal acknowledges the potential of 10-minute delivery, but he emphasizes the challenges, consistent and profitable execution.
Right.
It's like a siren song.
Okay.
Alluring, but potentially treacherous.
Yeah.
So they're cautiously dipping their toes back in the water.
What's their game plan this time?
So they're exploring a few different models to see if they can crack the code.
Mm-hmm.
One interesting approach is Bistro by Blinkit.
Bistro by Blinkit.
Yeah, it's a platform focused on those quick office meals and snacks,
Okay.
leveraging their existing Blinkit infrastructure.
I see.
So think of it as that targeted, super fast delivery,
Targeted.
catering to a specific need, or utilizing their existing strength.
So instead of trying to be everything to everyone, they're focusing on a niche where speed is paramount.
Speed is key.
And they already have that network in place.
Exactly. It's a much more calculated risk this time around.
Yeah.
Learning from those past mistakes and really adapting their approach.
It'll be fascinating to see if they can actually overcome those operational hurdles.
Right.
Make super fast delivery a viable part of their business.
It's a tough one.
It is.
But for now, let's turn our attention to their going out segment.
Going out? Okay.
We know it's experienced some explosive growth.
It has.
But what's fueling that?
Yeah, what's fueling it?
And what are their plans for this segment?
Big plans, I bet.
Well, they recently launched a dedicated app called District.
District.
It's for their going out business.
Okay.
So think of it as like a one-stop shop.
One-stop shop.
For dining out and entertainment ticketing.
So they're aiming to be the go-to platform for planning a night out.
Yeah, not just for ordering food in.
Is this a new app? Or do they have something before this?
It's brand new.
Brand new.
They just launched it in November 2024.
Oh, wow.
And it's already racked up an impressive 6.5 million downloads.
6.5 million downloads in just a couple of months.
Yeah, it seems like people are eager to have all their going out needs met in one place.
Yeah, I guess so.
It's convenient.
It is.
They're definitely putting their weight behind it.
Mm-hmm.
Top priorities right now are migrating customers from other platforms to District, and then enriching the app with a wider selection of experiences.
Oh, okay.
They're aiming to be that ultimate going out companion.
Yeah.
The app you open when you're looking for a good time.
So it's not just about convenience.
No, it's not just convenience.
It's about curating a comprehensive, engaging experience.
Engaging experience, yeah.
Are they sticking to just dining and entertainment for now, or are they planning to branch out?
So they've hinted that they might explore adding new subsegments to their going out offering in the medium term.
So not right away.
But right now, the focus is really solidifying their position in those two core areas, dining and entertainment.
So building a foundation before adding more floors to the building.
Exactly. Don't bite off more than you can chew.
Right.
But all this expansion, all these new ventures, these investments, it has to be impacting their bottom line somehow.
Yeah, no such thing as a free lunch, right?
Exactly. Or in this case, a free expansion.
So what's the financial story behind this growth spurt?
Well, employee costs have gone up.
Oh, okay.
Mainly because they're hiring more people for quick commerce and going out. And talent acquisition costs are always a factor.
Yeah, that's true.
So those investments in growth are definitely coming with a price tag.
But can they afford it? Are they dipping into their rainy day fund to fuel this expansion?
Surprisingly, their cash balance actually increased to INR 19,235 crore at the end of the quarter.
Wow.
A big chunk of that came from the proceeds of their qualified institutional placement.
Their QIP?
Their QIP, which brought in a cool INR 8,446 crore.
Okay, so they've got a pretty healthy war chest to finance these ambitious plans.
Yeah, it gives them some breathing room as they navigate all this competition.
Speaking of resources, let's not forget about the human side of the equation.
Right.
The shareholder letter touched on their ESG initiatives.
ESG.
Specifically data about delivery partner welfare.
Yeah, important stuff.
What stood out to you in that section?
Well, it seems like Zomato is very aware of the importance of ESG and its impact on their business. Right. Especially as all that scrutiny on gig economy practices keeps intensifying. So they're highlighting those efforts to provide delivery partners with flexible earning opportunities and comprehensive insurance coverage.
So they're trying to address those concerns about worker well-being head-on.
Definitely.
Showing that they're not just about profits.
It's not just about the bottom line.
But also about taking care of the people who make their business possible.
The people who make it all happen.
Exactly.
It's a good look.
It is. It's interesting to see them proactively address these issues. Provide that concrete data to back up their claims.
Transparency is key.
It really adds that layer of transparency and accountability to their operations.
It does.
All right, we've covered a lot of ground here.
We have.
Zomato's Q3 FY25 results. They're a mixed bag. Definitely not boring.
No, not boring at all.
We've seen that aggressive growth, strategic investments, a focus on that long-term value creation.
It's all there.
But there are also some challenges to watch out for.
Of course, always challenging.
Intensifying competition.
Definitely.
Economic uncertainties.
Yeah, that's a big one.
The need to balance growth with profitability.
It's a tightrope walk.
It is.
All right, I'm ready for the next part of our deep dive.
Yeah, me too. Let's dig a little deeper into some of these challenges and opportunities. Explore how Zomato is navigating this evolving landscape. And what it all means for their future prospects.
That's good.
Let's keep this culinary adventure going.
Let's do it. We've definitely seen that Zomato is not afraid to make these big moves.
No, they're not.
Like that aggressive expansion into quick commerce with Blinkit.
Right.
But, all that ambition, it does come with a pretty hefty price tag.
It does. We talked about those mounting employee costs, investments in Blinkit. It makes you wonder, are they spreading themselves too thin?
It's a good question.
Can they really juggle this rapid growth with the need to turn a profit?
Right.
Especially when the economy seems to be, wobbling a bit.
Yeah, it's definitely a question that's probably on the minds of a lot of investors out there.
For sure.
But what I find really interesting is how they're approaching this challenge. They're not just cutting costs everywhere. They're being very strategic
about it.
About where they invest and where they kind of tighten the reins.
Okay, so give me an example. Where are they making these strategic investments?
Well, let's stick with Blinkit for a second.
Okay.
Yes, they're rapidly expanding that store network, which obviously requires a ton of capital. But they're also laser focused on improving what we call the unit economics of each store.
Unit economics.
Yeah, they're obsessing over things like optimizing those delivery routes, minimizing waste, streamlining all that inventory management.
So they're trying to make each Blinkit store a well-oiled machine.
Yeah, exactly.
Even as they're adding more stores to that network.
They're building an army, right?
Yeah.
While you're simultaneously training each soldier to be elite.
Yeah, I like that.
It's a delicate balancing act, for sure.
It is.
They need to scale quickly to capture that market share.
Yeah.
But each new store needs to be contributing to that bottom line.
Right. Not draining it.
Not draining it. You got it.
Because no investor wants to see a company just burning through cash.
Right.
Without a clear path to profitability.
Exactly. And especially in this economy, there's going to be even more scrutiny to show that they can actually make this whole thing work financially.
It's all about proving themselves, right?
Proving themselves, you got it.
Show me the money.
Show me the money, exactly. And it seems like Zomato understands this. They're not just chasing those, vanity metrics like just user growth or order volume. They're actually demonstrating a clear focus on that path towards profitability.
Especially in their core food delivery business.
Especially in that core business. That's their bread and butter.
And that focus on profitability, it seems to be resonating with investors.
It seems to be.
Even though they missed that near break-even target for Blinkit.
Yeah.
The overall positive trends in their food delivery business seem to outweigh those concerns.
For now, at least.
At least for now.
It appears so.
Yeah.
Investors seem willing to give them a little bit of leeway on Blinkit's profitability. Maybe because they see the potential, of that quick commerce market.
Yeah, the potential's there.
It's still early days. Zomato's playing the long game.
It's a bet on the future, really. Investors are betting that Zomato's going to be able to execute on this vision.
Yeah.
Turn Blinkit into a profitable powerhouse eventually.
Exactly.
And that bet seems to be, at least for now, paying off.
For now, yeah.
Zomato's stock price has remained pretty stable.
It has.
Despite that Blinkit miss?
Despite that miss, yeah.
Suggesting that investors still have faith in that overall strategy.
It seems so.
Speaking of bets, Their decision to revisit that whole concept of 10-minute food delivery.
Oh, yeah.
That's a bold one.
Bold indeed.
Considering their previous attempt with Zomato Instant didn't exactly go as planned.
Not quite.
What makes them think they can succeed this time around?
Yeah, are they just hoping for a different outcome with the same approach?
Right, exactly.
They're not being naive about it, I'll tell you that.
Good.
Deepinder Goyal himself has acknowledged those challenges.
Of 10-minute delivery.
Yeah, emphasizing the need for dense kitchen networks.
Okay.
Super efficient kitchen operations.
So they're thinking this through.
Yeah, they're not messing around.
So their previous attempt with Zomato Instant might have stumbled.
It stumbled a little bit.
But it seems like they've learned some valuable lessons from that.
Yeah, gotta learn from those mistakes.
So they're applying those lessons to these new ventures, like Bistro by Blanket.
Exactly, using what they've learned.
Are they changing their approach this time?
It appears so.
Okay.
By leveraging Blinkit's existing infrastructure, focusing on a specific market segment.
Okay, like office workers looking for those quick meals?
Exactly. They're taking a more targeted
approach.
And potentially more viable approach.
It's almost like they're testing the waters again.
Yeah, dipping their toes back in.
But with a more focused
strategy.
Focused strategy this time.
And a safety net in place.
Yeah, they've got a backup plan.
Sounds like it.
Exactly. They're not just, throwing ideas at the wall and seeing what sticks.
Right.
They're actually experimenting with different models.
Okay.
Analyzing all that data. Refining their approach based on what they learn.
So it's a data-driven approach to innovation.
Data-driven, it's the way to go.
Which is always a good sign.
Always a good sign, yeah.
But even with the best data,
yeah,
most sophisticated algorithms, 10-minute food delivery,
yeah,
that's still a logistical nightmare.
It's a tough one. Are they doing anything to address those operational challenges?
They are.
Okay.
Because faster doesn't always mean better, right?
Right, especially if the quality suffers.
Right, or if the delivery person is, put at risk.
Exactly.
So they're exploring a few different avenues.
Okay.
One is collaborating with food researchers, producers, chefs, restaurants.
Wow, the whole team?
Yeah, the whole gang, to streamline kitchen operations, reduce prep times.
Without sacrificing quality.
Without sacrificing quality, exactly. And they're also experimenting with dedicated delivery fleets.
Okay, dedicated delivery fleets.
Yeah, just for those super fast deliveries.
Right.
Focusing on those specific high-demand areas where those tight delivery times are more feasible.
I see, so it's a multi-pronged approach.
Multi-pronged, tackling the challenge from all angles.
They're trying to optimize everything.
Yeah, everything.
From kitchen prep times.
To delivery route.
To make sure they can deliver on that promise of
speed and consistency.
Speed and consistency, that's what matters.
Yes, and they're being realistic about the difficulties.
Okay, that's good.
Deepinder Goyal hasn't shied away from admitting that making 10-minute delivery work consistently and profitably is a huge undertaking.
Yeah, it's a big feat.
It's a big feat. It's refreshing to see that they're not over-promising and under-delivering.
Right.
They're being transparent about those challenges.
Yeah.
Taking a measured, calculated approach.
But even if they can nail the logistics, 10-minute delivery might not be for everyone, right?
You're right.
Some customers might prioritize affordability, wider selection.
Yeah, over that super fast delivery.
Exactly.
And some people might have concerns about the pressure it puts on the drivers.
Exactly.
That's where their diversified portfolio comes in.
Okay, diversified portfolio.
They're not putting all their eggs in one basket.
Right.
They've got that core food delivery business.
Yeah.
Their quick commerce venture with Blinkit. Their going out segment. And they're even, dabbling in those new concepts like 10-minute delivery.
It's like a portfolio approach to risk management.
It is, exactly.
Hedging their bets.
Hedging their bets.
Exploring different market segments.
Different segments.
Catering to those diverse customer preferences.
All those different needs.
And that diversification, that could be crucial to their long-term success.
It could be, yeah.
This food tech landscape, it's constantly evolving.
Right? Change.
Having that diverse range of offerings allows them to adapt, stay ahead of the curve.
Stay ahead of the game.
They're not just a food delivery company anymore.
No, they're not.
They're evolving into a comprehensive food tech platform.
That's a good way to put it.
Connecting consumers with this whole range of food-related services and experiences.
It's a big vision.
It is ambitious.
Ambitious, yeah.
It'll be fascinating to see how it all unfolds.
I can't wait to see what they do next.
But for now, let's shift our focus back to the present. We talked about Zomato's impressive growth in that going out segment, driven by the launch of their dedicated app, District. What exactly are their plans for District?
Yeah.
How does it fit into their overall strategy?
So their immediate priority seems to be threefold.
Threefold, okay.
First, they're focused on migrating those customers from their other platforms.
Like Zomato, Paytm, Insider, Ticket New.
All of those, yeah.
To the District app.
To District, yeah.
They want to create that single unified destination.
Yeah, one-stop shop.
For all those going out experiences in India.
Make it easy for people.
Yeah, consolidating their offerings under one app, it simplifies things for customers.
Yeah, definitely.
Allows Zomato to leverage that existing user base more effectively.
Leverage that user base, exactly.
Second, they're working on driving customer engagement and delight on District.
Engagement and delight.
By improving the selection of experiences available on the platform.
More options, more fun.
More options, more fun.
Exactly. They're aiming to be the most comprehensive and user-friendly platform.
Out there.
Out there, yeah. For discovering and booking those going out experiences.
And their third priority is using technology and new features to simplify that discovery process.
Make it easy.
And enhance that customer experience.
Enhance the experience. Make it enjoyable.
They're investing in making the District app as seamless as possible.
Seamless and enjoyable.
Enjoyable to use as possible.
They want to make it easy for users to find what they're looking for. Book their experiences hassle-free, and have a great time when they're out and about.
Sounds like they're aiming to be the indispensable companion.
Yeah, the go-to guide.
Like anyone looking to have a good time in India.
For sure.
The ultimate guide to the country's, vibrant entertainment and dining scene.
That's a great way to put it. They want to be the go-to platform for everything going out.
Not just food delivery.
Not just food delivery anymore.
It's a bold vision.
It is.
It'll be interesting to see how they execute on it.
Yeah, they're not afraid to experiment.
They're clearly not afraid to experiment and innovate.
Which can lead to setbacks sometimes.
Yeah, sometimes it doesn't work out.
But it also keeps things interesting.
It does. It keeps on our toes.
Keeps us on our toes, yeah.
But even with all this innovation and experimentation, they're also showing that commitment to sustainability and social responsibility.
Yes. They're focused on that delivery partner welfare.
Yeah.
That's a testament to that.
It is.
They're recognizing that their success is really linked to the well-being of their delivery partners.
And they're not just, paying lip service to this issue.
No, they're not.
They're backing it up.
With concrete actions, yeah.
Measurable data.
Data is key.
Sharing information about delivery partner earnings, flexibility, insurance coverage.
Transparency is crucial in this area,
It is.
It allows investors and the public to hold them accountable. Make sure those actions actually match their words.
Right. Walk the walk.
Walk the walk, exactly.
All right. We've covered a lot of ground here.
We have.
From Zomato's aggressive growth strategy, their focus on profitability, those experiments with 10-minute delivery, their expansion into the going out segment.
It's a lot.
It's clear that they're a company in constant motion.
Always moving.
Adapting to a rapidly changing landscape.
Yeah. You've got to be adaptable in this market.
Trying to stay one step ahead.
One step ahead of the game.
They're a company that's not content to rest on their laurels.
No, they're not.
Constantly innovating, exploring new opportunities.
Always pushing the boundary.
Pushing those boundaries of what's possible.
In the food tech space.
But they're also facing some pretty significant challenges.
Of course.
Both internal and external.
Internal, external, it comes with the territory.
Competitive landscapes intensifying.
Ew.
Economic headwinds are creating a lot of uncertainty.
Yeah. It's a tough time out there.
Pressure to balance growth with profitability.
Yeah, that never goes away.
It never goes away.
No, it doesn't.
So the question remains, will they be able to navigate these challenges and emerge as that undisputed leader in the Indian food tech market?
It's the question everyone's asking.
Or will they become another cautionary tale?
Right. Ambition outpacing execution.
That's the big question.
It is.
Only time will tell.
Only time will tell. We'll have to wait and see.
But one thing is for sure, Zomato's journey. It's going to continue to be a fascinating one to watch.
Definitely a company to keep an eye on.
Absolutely. They're a company that's never boring.
Never boring.
Always pushing the envelope.
Always.
Always keeping us on our toes.
That's what makes them such a compelling case study, for anyone interested in the future of food tech.
The dynamics of a rapidly evolving market.
It's a wild ride.
All right, before we wrap up this deep dive,
let's
take a step back. Consider the bigger picture.
Zoom out a little bit.
We've talked a lot about Zomato's specific strategies, challenges.
The nitty-gritty.
But what are the broader trends shaping the Indian food tech landscape?
The big picture.
How is Zomato positioning itself within this evolving ecosystem?
Good question.
Because their success or failure isn't happening in a vacuum.
Right. It's all connected.
They're part of a much larger story.
A much larger story, yeah.
So let's zoom out for a moment.
Okay, zoom out.
What are some of those key forces shaping the Indian food tech scene?
What are the currents that Zomato's trying to ride?
Exactly.
Okay, so the Indian food tech market, it's going through a period of rapid transformation right now.
Rapid transformation, okay.
It's driven by a bunch of different factors.
Like what?
Rising disposable incomes.
Okay, more people have money to spend.
Exactly. Increasing smartphone penetration.
More people have access to the internet, online platforms.
And also just changing consumer preferences.
So people are demanding more convenience, more diversity when it comes to their food choices.
Exactly. It's not just about, basic needs anymore. It's an experience.
It's an experience, yeah. And these trends are creating a really fertile ground for food tech companies like Zomato to flourish.
Right.
But it's also attracting a ton of competition.
Oh, yeah, we talked about that.
New players entering the market, existing ones expanding their offerings.
It's a classic case of supply and demand.
It is.
The demand for food tech services is growing.
Growing rapidly.
And companies are scrambling to meet that demand.
Yeah, they're all trying to get a piece of the pie.
Capture their share of this, lucrative market.
Exactly, in all this competitive intensity. It's really forcing companies to differentiate themselves.
Okay.
And innovate constantly.
Right.
We're seeing companies experimenting with new business models, new technologies, new ways to engage those customers.
Like Zomato's foray into quick commerce with Blinkit.
Exactly.
Their experiments with 10-minute delivery. Those are prime examples of this drive for innovation.
Yeah, they're not content to just sit still.
No, they're not. Let the market pass them by.
They're out there hustling.
They're out there hustling, trying to stay ahead.
They're not just a food delivery platform anymore.
No, they're not.
They're aiming to become a comprehensive food tech ecosystem.
A whole ecosystem.
Catering to that wide range of customer needs.
And preferences.
Yeah, and preferences.
It's ambitious.
It is. So they're not just competing with other food delivery companies.
Right. They're competing with everyone.
Grocery delivery services, restaurant reservation platforms.
These aren't just traditional brick-and-mortar businesses.
That are trying to up their online game.
Exactly. The lines are blurring.
They are.
And the competition is coming from all directions.
Food tech battleground is expanding.
Expanding rapidly.
Stakes are getting higher. And this blurring of lines creates both opportunities and challenges.
Two sides of the same coin.
For Zomato.
On the one hand, it allows them to expand their addressable market.
Okay.
Capture a larger share of that consumer spending.
Okay, because if they can become the go-to platform for everything food-related, their growth potential is enormous.
Enormous, yeah.
But on the other hand, it exposes them to this wider range of competitors.
Right, more competition.
Forces them to manage this more complex
and it's a dynamic. It's a lot to juggle.
It is, a lot of balls in the air.
It requires a very agile and adaptable approach.
They've got to be quick on their feet.
Quick on their feet, exactly.
All right, let's dive a little deeper into some of the specific trends shaping the Indian food tech market.
Okay, let's get specific.
We talked about this rising demand for convenience, diversity.
Yeah.
But what are some of the other factors influencing consumer behavior in this space?
It's a good question.
What are those underlying needs?
Yeah, those desires that Zomato needs to really understand.
And cater to.
Cater to, exactly.
What are they?
Okay, so one key trend is this growing emphasis on health and wellness.
Health and wellness, okay.
Consumers are becoming a lot more conscious of their dietary choices.
Okay.
And are increasingly seeking out those healthy and nutritious food options.
So it's not just about satisfying hunger anymore.
It's not just about filling your belly.
It's about nourishing the body.
Nourishing the body, yeah.
Feeling good about what you eat.
Exactly. It's a holistic approach to food.
I like that.
It's not just fuel. It's about well-being.
So it's not just about convenience anymore.
Right.
It's also about quality.
Quality and nutritional value.
Consumers are demanding more.
They are.
From their food experiences.
They want the whole package.
And they're willing to pay for it.
They are. They're willing to invest in their health.
This shift is creating opportunities for food tech companies to partner with those health-focused restaurants and brands.
Absolutely.
Curate those healthy meal plans, provide nutritional information and guidance.
Yeah, it's a whole new market.
It's a whole new world.
We're seeing this rise of, specialized platforms and services catering to those specific dietary needs.
Okay.
Vegan, vegetarian options, gluten-free, keto-friendly meals.
It's all out there.
It's all out there, yeah.
We're already seeing some of these trends play out on Zomato's platform.
We are.
They've introduced features like healthy filters.
Okay, healthy filters.
Calorie counts. Partnerships with health-focused restaurants.
Yeah, they're getting on board.
They're recognizing that health and wellness are becoming increasingly important.
It's a priority for consumers.
And they're adapting their platform
to
meet those needs.
Meeting those needs, exactly.
They're even experimenting with features that allow users to track their dietary intake.
Oh, that's interesting.
Make more informed food choices.
Yeah, kind of like a food journal built into the app.
Yeah, exactly.
That's smart.
Another trend that's gaining momentum is that personalization of food experiences.
Personalization, yeah.
Consumers are no longer content with a one-size-fits-all approach.
No, they want something tailored to them.
They want those food experiences that are tailored to their individual tastes.
Yeah.
Preferences. Dietary needs.
They want to feel seen and heard.
And technology is playing a key role in enabling that personalization.
Technology is key.
Food tech platforms are using all that data, algorithm, to create personalized recommendations.
Exactly.
Curate those customized meal plans.
It's all about data these days.
Even predict what users might want to order.
Yeah, based on their past behavior.
It's
pretty amazing what they can do with data.
And Zomato's at the forefront of this trend.
They are.
Leveraging that vast trove of data.
Yeah, they've got a lot of data.
Create a more personalized
experience for their users.
They're using data to recommend restaurants.
Yeah.
Suggest dishes, even predict delivery times with remarkable accuracy.
It's all about making that experience feel tailored and effortless.
Effortless. Yeah, they're taking the friction out of it.
Exactly.
And they're constantly refining their algorithm.
Yeah. Always improving.
Adding new features.
To enhance that personalization aspect.
They're even experimenting with AI-powered chatbots.
Oh, chatbots. That's interesting.
Yeah, they can answer user questions, provide recommendations, even take orders.
Wow. The future is here.
The future is here.
It's pretty amazing.
Another interesting trend is this rise of cloud kitchens.
Ah, cloud kitchens.
Oh, ghost kitchens, as they're sometimes called.
Yeah, ghost kitchens.
They're becoming a pretty significant force.
They are.
In the food tech landscape.
Yeah, they're shaking things up.
Disrupting that traditional restaurant model.
It's a whole new way of doing things.
Creating new opportunities.
For both those established brands and aspiring food entrepreneurs.
So for those who might not be familiar, can you explain what cloud kitchens are?
Sure. Cloud kitchens are essentially delivery-only restaurants. They don't have a physical storefront. And they're designed specifically for online ordering and delivery.
So they're like virtual restaurants.
Virtual restaurants, exactly.
Existing solely in that digital space.
That's a good way to put it.
They're becoming increasingly popular.
They are.
Because they offer several advantages.
Advantages over traditional restaurants.
For example?
Well, for example, they have lower overhead costs.
Okay. Lower overhead costs.
Because they don't need to pay for rent.
Right.
Or front of house staff.
Right.
They can also really focus on specific cuisines
okay.
or dietary needs.
So they can really niche down.
Niche down, exactly.
And they can easily scale up or down their operations based on demand.
Based on that demand, yeah, flexibility is key.
So these advantages are making cloud kitchens a pretty attractive option.
They are, yeah.
For both those established restaurant chains looking to expand their reach.
Right.
And aspiring food entrepreneurs who want to test out new concepts.
Yeah, without the risk.
Without that risk.
And expense of opening a traditional restaurant.
And Zomato is playing a key role in facilitating the growth of cloud kitchens.
They are. They're providing these businesses with access to a wide customer base, a reliable delivery network, and valuable data insights.
They're really supporting that ecosystem.
They are. Zomato's even launched their own cloud kitchen platform.
They have.
Yeah, it's called Zomato Kitchens.
Zomato Kitchens.
Yeah, it provides infrastructure and support to cloud kitchen businesses.
So they're not just partnering with cloud kitchens.
No, they're not.
They're actively investing in that ecosystem.
Yeah, they're shaping the future.
Recognizing that cloud kitchens are this growing force in the market.
They're not going anywhere.
And they're positioning themselves to benefit from this trend.
Smart move.
All right, we've covered a lot of ground here.
We have.
It's a dynamic and ever-evolving landscape.
Always changing.
And Zomato's right in the thick of it.
Right in the thick of it, yeah.
They're experimenting with new business models, embracing new technologies, constantly adapting to those changing consumer preferences.
They're not standing still.
They're not. It's a fascinating time to be watching this space.
It is.
Zomato's journey is a microcosm of the broader trends shaping the future of food.
A microcosm. I like that.
All right. Before we wrap up this second part of our deep dive,
okay,
let's take a moment to consider the implications of all these trends for investors and for the future of Zomato.
The big picture.
What should investors be paying attention to?
What should they be watching for?
As they evaluate Zomato's performance and prospects.
Because it's not just about understanding the past.
Right.
It's about anticipating the future.
Anticipating the future.
And that's what investors care about.
So what are the key questions that investors should be asking
as they try to...
All right, we're in the final stretch of our Zomato deep dive.
The home stretch.
We've crunched the numbers, dissected their strategies.
We've done it all.
Explored the food tech landscape they're navigating.
It's been quite a journey.
It has.
Now the big question.
The big one.
What does the future hold for Zomato?
Will they conquer the Indian food tech scene? Or will they stumble along the way?
The crystal ball question.
I know, right?
Predicting the future is always a risky business.
Especially in a fast-paced world like food tech.
Exactly. Things change so quickly.
But we can play detective, right?
We get
those clues.
Gather the evidence.
Make some educated guesses.
Based on what we've learned.
So let's put on those detective hats.
Okay, detective hats on.
What are those key factors, those make-or-break elements?
The things that really matter.
That will determine Zomato's success in the years to come.
All right, clue number 1.
Okay, hit me with it.
Their ability to navigate this increasingly competitive landscape.
Right, we talked about that.
Remember the Indian food tech scene?
Yeah.
It's a crowded party.
It is. Everyone's trying to get a slice.
New players are crashing in. Existing ones are jostling for space.
It's a multi-front battle.
It is. They're not just competing with other food delivery apps anymore.
Right, they're facing off against quick commerce contenders.
Cloud kitchen platforms.
Even those traditional restaurants trying to up their digital game.
Exactly. So for Zomato to thrive, they need to offer something unique.
They need that special something.
That sets them apart from the crowd.
Give customers a reason to choose them.
Over all those countless other options.
So what's their secret sauce? How are they planning to stand out in this food tech battle royale?
Well, they're relying on a few key weapons.
Okay, lay it on me.
One is brand recognition and their loyal customer base.
They've built a strong brand presence in India.
They have. People trust the name Zomato.
They do, but loyalty isn't guaranteed these days.
You're right. You got to earn it.
What are they doing to keep those customers coming back?
So they're focusing on creating a top-notch customer experience.
Okay, customer experience is key.
Using technology to build a platform that's personalized, convenient, engaging.
Right, those features we discussed.
Personalized recommendations, real-time order tracking.
Multiple payment options.
Even voice ordering.
They're pulling out all the stops.
Making the experience seamless and enjoyable.
It's like they're creating a concierge service for food.
A concierge service, I like that.
A platform that anticipates your needs.
Makes the whole process so smooth.
From discovery to delivery.
Smooth as butter chicken.
Exactly. They're aiming to become that indispensable food tech companion.
The go-to platform for everything food-related.
But a great customer experience only gets you so far, right?
You're right. You need to be financially sustainable.
Investors aren't going to be happy if Zomato keeps throwing money at growth.
Without showing a path to profitability.
Exactly. And that brings us to clue number 2.
Clue number 2.
Balancing growth with profitability.
The eternal struggle.
They've poured a lot of resources into expanding their operations.
Launching new ventures like Blinkit.
Even acquiring other companies.
That Blinkit acquisition was a big one.
It was. They're not shy about spending money to make money.
But can they keep up the spending spree indefinitely?
At some point, the music's going to stop.
They're going to need to show they can dance to a profitable tune.
Exactly. These investments are crucial for long-term growth.
They are.
But they also put pressure on that bottom line.
It's a balancing act.
It is. Find that sweet spot.
More strategically.
While also optimizing those operations to become more efficient.
More profitable.
It's like walking a tightrope.
One wrong step.
They need to keep moving forward, expanding their reach.
But maintain that balance.
Avoid a costly fall.
Have they shown any signs they can pull this off?
Well, they've made some progress.
Okay, good.
Food delivery business is becoming increasingly profitable.
That's a good sign.
They're taking steps to improve the unit economics of their Blinkit stores.
Focusing on making each store profitable.
Not just adding more stores.
That's the key.
That's encouraging.
Yeah.
But it's still early days, right?
Early days.
And they keep this momentum going.
Especially as competition heats up.
Economic headwinds are out there.
It's a tough environment.
It is. It's a big question mark.
It is.
They've said they're committed to achieving profitability in all their business segments.
They have.
But it's a tough road ahead.
Investors will be watching closely.
They will.
To see if they can actually deliver on those promises.
Build a truly sustainable business.
That's what it's all about.
Okay, so we've got competitive differentiation, balancing growth with profitability.
Two big ones.
What's clue number 3 in this detective story?
Clue number 3 is their ability to adapt.
Adapt to what?
To the ever-changing technological landscape.
Right, because the food tech world is constantly evolving.
It's a digital arms race.
We're talking artificial intelligence, machine learning,
blockchain, even the metaverse.
All those buzzwords changing how we live, work. These technologies are reshaping the food tech landscape.
And Zomato needs to be at the forefront of this wave.
Not lagging behind.
They need to be constantly experimenting, innovating, adapting.
To stay ahead of the curve.
Exactly. If they fall behind, they risk becoming irrelevant.
It's like the Red Queen's race.
Got to keep running just to stay in place.
They've shown they're not afraid of technology.
They haven't.
They're using AI and machine learning already.
Personalizing recommendations.
Optimizing delivery routes.
Predicting demand.
Can they keep up this pace of innovation?
As the technology landscape shifts even faster.
That's the challenge. They can't rest on their laurels.
No resting allowed.
They need to keep their finger on the pulse of those technological advancements.
Identify those opportunities.
Enhance their platform.
Be prepared to pivot their strategies.
Okay, so those are 3 big clues.
3 big ones.
Competitive differentiation, balancing growth with profitability.
Technological adaptability.
Any other factors we should be considering?
There's one more clue.
Okay. The missing piece of the puzzle.
It might be the most crucial of all.
All right, lay it on me.
Their ability to navigate the regulatory landscape and address those social responsibility concerns.
Because the food tech industry is facing increasing scrutiny.
From regulators, lawmakers, the public.
There are a lot of concerns.
Data privacy, food safety.
Fair labor practices.
The environmental impact of all those deliveries.
It's not just about delivering food anymore.
It's about doing it responsibly.
Ethically.
Zomato needs to be proactive.
In addressing these concerns.
Working with stakeholders.
Demonstrating that commitment to responsible business practices.
They need to show they're not just about profits.
Right. It's about building a sustainable,
equitable
business that benefits everyone.
Everyone involved.
They've taken some steps in this direction.
They're
sharing data about delivery partner welfare.
Implementing those measures to improve food safety.
Exploring ways to reduce their environmental footprint.
It's a good start.
But are they doing enough?
It's an ongoing process.
It is.
They need to keep raising the bar, setting industry standards.
Engaging in that open and transparent dialogue.
With all those stakeholders.
Building trust.
Demonstrating they're a responsible corporate citizen.
So it's not just about winning the food tech race.
It's about winning it the right way.
In a way that benefits not just their bottom line,
but their employees, their customers.
The communities they serve.
It's about the bigger picture.
Consumers are voting with their wallets these days.
They are.
Choosing brands that align with their values.
Zomato needs to show they're a company worth supporting.
A company making a positive impact.
On the world.
All right. We've gathered all those clues.
Examined the evidence.
Analyzed the potential scenarios.
That's our verdict.
Will Zomato rise to the top or will they stumble?
Predicting the future is always a gamble.
It is.
But based on what we've seen, Zomato has a real shot at success.
They do.
If they can execute on those strategies.
And navigate these challenges effectively.
It's all about execution.
They've got a lot going for them.
They do.
Strong brand, loyal customer base.
Diversified portfolio.
Willingness to embrace change and innovation.
They're not afraid to take risks.
Push those boundaries.
But they also need to stay focused.
On profitability.
Adapt to that ever-changing tech landscape.
And build trust.
By addressing those social responsibility concerns.
It's a tall order.
But they've shown they're up for the challenge.
It's a complex and challenging journey.
It is.
But it's also an exciting one.
Definitely exciting.
Zomato is at the forefront of a transformative industry.
They are shaping the future of food.
And their story is a microcosm of the broader trends shaping, the future of food.
And that's what makes this deep dive so fascinating.
It's not just about analyzing a company's financial performance.
It's about understanding those forces
that are reshaping how we eat, live, interact with the world.
It's about the big picture.
It's a reminder that business is about more than just profits and losses.
More than just the bottom line.
It's about creating value.
For customers, employees, society, the planet.
Well, there you have it, folks. That's a wrap on our deep dive into Zomato's Q3 FY25 results.
We covered a lot of ground.
We did. Financial performance, strategic decisions,
competitive landscape,
broader trends shaping the future of food tech.
We analyzed, debated, explored.
Hopefully giving you, our listener, a delicious serving of insights.
Food for thought.
But remember, this is just a snapshot in time.
A glimpse into the world of Zomato.
Food tech world is constantly evolving.
Always changing.
Zomato's story is far from over.
Stay tuned.
Keep your eyes peeled.
We'll be back to deep dive into their next chapter.
Uncovering those latest developments.
Dissecting those implications.
For you, our curious and informed listener.
Until then.
Happy eating.